Hey everyone, welcome to this vodcast, Job Order Costing, the nuts and bolts of how companies actually track the cost of what they make, the service that they offer. I'm Professor Jeff Byrne and I'm excited to be here with you. In this vodcast, I'll show how companies that make customized products or offer individualized services use job order costing and assign overhead costs using a predetermined overhead rate. How this overhead rate gets applied to jobs in real time. We'll break down total and per unit product costs, and then go deeper with how companies use multiple predetermined overhead rates across departments. We'll also look at over and under applied overhead. And finally, we'll show how job order costing is used far beyond manufacturing in law firms, movie studios, hospitals, and more. By the end of this podcast, you'll understand how job order costing supports better decisions in just about any setting where things are customized. All of that and more in this vodcast. Well, meet Vanilla Bicycles, a high-end, highly customized bike maker in Portland. They only produce 40 to 50 bikes a year, each made to order and priced around $7,000. Each bike has tailored frame dimensions, unique seat preferences, etc. Since each bike is one of a kind, each order is its own job. And that's where job order costing shines. It allows us to track direct materials, direct labor, and overhead separately for each job. Vanilla uses a system called absorption costing, meaning that all manufacturing costs, both fixed and variable, are absorbed into the product. This includes direct materials, labor, depreciation, utilizes anything related to the factory. But anything outside the factory, like marketing or office or salaries, those are period cost and get expensed immediately. So what's a job in accounting speak? It's just a custom order. Each of these builds is tracked as a separate job because each one has different materials, different labor, and overhead. Job order costing captures the cost for each specific bike or job. It could be job 1, one custom bike for a triathlete. Job 2, 5 bikes for a boutique cycling studio in Atlanta. Each gets tracked separately on its job cost sheet rather than averaging everything across the entire manufactured fleet. First up, direct materials. Vanilla Bicycle uses a bill of materials to list what's needed for each bike. Maybe 2 tires, a frame, a seat, handlebars, etc. When they pull items from inventory, they fill out a material requisition form to record it. That way, costs are directly tied and allocated to each specific job. Next, for direct labor. Well, every employee fills out a time ticket, noting exactly how long they worked on job 1, job 2, and so on. That labor cost, it's also directly traced. Well, so far so good. But now we come to the tricky part, allocating overhead to each job. Manufacturing overhead, it's a murky soup of utilities, indirect labor like the supervisor salaries, indirect material like those insignificant things that are too much difficult to track like glue, solder, shop towels, all the stuff needed to make the product but can't be easily, conveniently, and accurately traced to the product, or just doesn't make economic sense to do so. For example, you can't determine how much of a utility bill went into job 2's headlight wiring. Plus, utility bills, well, they change throughout the year. Should similar bikes be more expensive in winter because of the high plant utility bills? Well, no. At Vanilla Bikes, they don't wait until the end of the year to figure out how much overhead went into each bike. That would be too late. The bikes are long gone, plus uneven. So instead, they estimate upfront using something called the predetermined overhead rate, or the POR for short. It equals estimated total manufacturing cost divided by estimated amount of the allocation base per period. So 2 estimates, one for the overhead cost, that's the numerator, and one for the allocation base, That's the denominator. Okay, so you might be asking, what's an allocation base? Well, it's just the thing we're going to use to systematically spread all of the overhead cost across jobs. It could be direct labor hours for the year, direct labor cost, machine hours. Delta, when they're allocating the cost for planes, they might think about the total number of miles all their planes might fly in a particular year. Emory Hospital might allocate the overhead for all of its hospitals based on the number of beds that could be allocated, could be used in that particular hospital for a period. Vanilla bikes, it makes sense to use direct labor hours because that's the main driver of production. These bikes are handcrafted after all. Let's walk through the four-step process. Step one is to estimate how many manufacturing direct labor hours Vanilla expects to use during the year. That becomes the denominator. Let's say they looked ahead and they estimate 10,000 direct labor hours for the upcoming period. That's what we'll divide our overhead cost into. Step two is to estimate the total manufacturing overhead cost. Vanilla's expected fixed overhead for the year of $100,000. Things like expected rent for the year, factory insurance, projected utilities for the year, equipment depreciation, etc. All of the anticipated overhead for the period or year. Again, why not actual? Well, you won't know these until the end of the year, and the product is already gone. Plus, some bills might change throughout the year, like utilities, and you wouldn't want a higher price for bikes in the winter just because heating bills are higher. So make an estimate of all the overhead for the year. Get as close as possible, and we can make adjustments at the end of the year if we're slightly off. They also expect variable overhead of $2 per direct labor hour. So with 10,000 direct labor hours expected, we multiply 2 times 10,000 direct labor hours, and we have $20,000 in estimated or projected variable overhead. Add the fixed and variable pieces together, 100,000 plus 200,000 equals 120,000 in total estimated manufacturing overhead. That gives us our numerator, okay? Well, now we divide to get the predetermined overhead rate. 120,000 of estimated overhead divided by 10,000 of direct labor hours gives us our computed predetermined overhead rate of $12, okay? And that's the magic of job order costing. It lets us estimate, make consistent application of indirect cost to individual jobs even when actual bills fluctuate. Okay, that's a lot, so let's recap the 4 steps quickly. Step 1, estimate the allocation base, in this case 10,000 direct labor hours. Step 2, estimate fixed and variable overhead. 100,000 fixed plus 20,000 variable, total estimated overhead 120,000. Use that equation for the slope of a line, y equals a plus b times x. That's for mixed cost as well. That's $120,000 in total overhead. Compute the predetermined overhead rate, 120,000 divided by 10,000 direct labor hours, $12 per direct labor hour. Boom! We're ready to apply overhead to actual jobs using this $12 rate. And again, why not just wait and use actual overhead? Because the actual costs fluctuate. Heating bills spike in winter. Machines break down. And that would make identical jobs look more or less expensive for no good reason. Also, you wouldn't know the true costs until the end of the year. Okay? So let's now apply overhead to jobs. Vanilla's predetermined overhead rate of $12 per direct labor hour. Let's say they received a job for 4 custom touring bikes and they spent 150 direct labor hours completing it. That's quite a bit of time. These are not your standard Target specials, folks. To apply overhead to this job, we would multiply $12 per direct labor hour times the 150 direct labor hours to come up with $1,800. So $1,800 is the amount of manufacturing overhead applied to this job. And remember, this doesn't include things like direct material and direct labor costs. We're just talking about the overhead. So this job will have direct materials like the tires, frames, seats, pedals. It will have direct labor like the actual wages paid for those 150 hours. And now this 1,800 of applied overhead, that also becomes part of the job, okay? All three go into the job's total cost. And that job cost sheet becomes the official record, not just for internal use, but eventually for things like inventory valuation, financial reporting, and cost of goods sold. This type of predetermined overhead rate costing system, it's known as a normal costing system. You apply overhead as you go using a predetermined rate or a poor rate. You get faster, more stable, more usable job cost data. But, as you probably guessed, it's never 100% accurate. What happens when overhead we applied doesn't match the overhead we actually incurred? Well, later at the end of the period, you adjust for any difference between actual and applied overhead. We'll talk about that at the end of this vodcast. All right, shift gears, no pun intended, and look at another company, Creative Gifts. They're in the business of making custom trophies and awards. Think Oscars for advertising agencies, high-end retirement awards, or participation trophies with an attitude. Most of their products are made to order, which means they also use a job order costing system like that of Vanilla Bikes. Now, let's look at one specific job, Job 121. This was a big order, 100 trophies for a fancy advertising award event happening in July. And yes, even ad execs like holding shining objects. So on the job cost sheet, we start by logging the three types of cost. Let's say there was direct materials, $8,100 in this case. That's the metal, the wood stands, etc. Direct labor. Let's say that's 500 wages for workers who were doing the shaping and the finishing of the trophies for a total of 50 hours. Next, applied manufacturing overhead. Let's just use for simplicities that same $12 predetermined overhead rate that we've already seen and apply that to the 50 direct labor hours. The allocation base that Creative Gifts would use to allocate the cost, that would add up to then $600. Okay, the 50 direct labor hours times that $12 pour. That equals the 600. Well, now just add them up. Total job cost, 8,100 plus 500 plus 600, or 9,200. What's the cost per trophy? Well, 9,200 divided by the 100 trophies, $92 per unit. This $92 unit product cost serves two purposes: valuing inventory for any trophies that aren't yet shipped, cost of goods sold for the ones that are sold or delivered. It's also really useful for pricing decisions and margin analysis. If we know our unit cost is $92 and say we want a 30% profit margin, that's 130% markup, then we better be charging about $120 for each of these trophies. Okay, well, here's why this process matters so much. If we assign cost inaccurately, say by forgetting some overhead or using the wrong rate, we might underprice jobs, overvalue our inventory, and more importantly, misjudge our profitability. That's why job order costing, when done right, gives managers the data they need to make real business decisions, not just passing accounting quizzes. But what if we're oversimplifying? What if one department uses more machine time and another uses more labor? Well, next up, we'll take this even further with multiple predetermined overhead rates. A lot of companies, especially those with multiple departments, overhead isn't used the same way everywhere. Let's look at Bittersweet Bakery, which runs two departments: baking, which uses a lot of machines, and packaging, which is very labor heavy. They use a separate overhead rate for each, and here are the estimates. Baking has $508,200 of total overhead and 54,100 machine hours for a predetermined overhead rate of $9.39 per machine hour. Packaging has estimated $804,750 of overhead, 81,000 estimated direct labor hours for a pour of $9.94 per direct labor hour. These rates are more precise than using just one plant-wide rate. Now, Let's say we're costing job 100, which used 84 machine hours in the baking department, 14 direct labor hours in the packaging department. For job 100, 84 machine hours times $9.39, the applied overhead would be $788.76 for the baking department. 14 direct labor hours times $9.94 would mean $139.16 for the packaging department's applied overhead. So the total applied overhead for this job would be $927.92. Now let's pull it all together. Job 100 also has these costs. DM, direct materials in the packaging of baking of 136, packaging of 120, for total materials direct 256. Direct labor in packaging, 42. Direct labor in baking, 42. Direct labor in packaging, 196, for a total of 238. The overhead that we just calculated for baking would be $788.76. For packaging would be $139.16. Altogether, total applied overhead, $927.92. That means the total cost for job 100 would be $1,421.92. Remember, these direct material and direct labor amounts would be given, and we probably would have to calculate what the overhead rates and the overhead applied is for each of the departments. Okay, $1,421.92. Well, if there were 100 units in the job, simply divide this total job cost by the number of units, and we have unit cost of $14.22. Okay, so why go through the trouble of using multiple rates? Well, because it improves accuracy. Each job gets charged a more realistic share of the overhead based on how it actually uses resources. That leads to better pricing decisions, fewer surprises when reviewing margins, more credible financial reporting. In other words, it gives managers better information, which is the whole point of managerial accounting. Before we wrap up, here's something important to consider. Job order costing isn't just for companies that make physical products. It's also the go-to system in many service-based organizations, especially when every client or project is different. Think about a law firm. Tracks billable hours, research time, and paralegal support for each case. That's a job. A hospital tracks cost by patient with unique tests, medications, procedures, and lengths of stay. That's a job. A movie studio producing a feature film like Forrest Gump assigns labor, materials like sets and costumes, and overhead like editing suites to each production. That's a job. A repair shop, a consulting firm, a custom software agency, they all use job order costing to understand the full cost of their service engagements. Bottom line, job order costing is one of the most versatile, widely used cost systems out there. It works anywhere you provide customized products or services, which makes it incredibly valuable to understand, no matter what industry you're in. All right, we've applied overhead to jobs using a predetermined rate, but here's the thing, those rates are based on estimates, aren't they? So what happens when reality doesn't match the plan? Let's say a company applies $200,000 of overhead throughout the year using the predetermined rate, but actually incurs $220,000 in real overhead cost. Well, that's underapplied overhead. We didn't apply enough. It's the opposite happens. Say we only incur $180,000, but we applied $200,000, then it's over-applied overhead. It's not the end of the world, but it needs to be adjusted. At the end of the period, companies compare actual overhead and applied overhead. The difference is typically closed out through cost of goods sold account. Why COGS? Because that's where all those job costs eventually land. Adjusting COGS keeps our financials aligned with actual performance. So if we under-applied overhead, the adjustment is to increase cost of goods sold, which reduces net income. If we over-applied overhead, we decrease cost of goods sold, which lower cost increases net income. In some cases, especially in large companies with many jobs still in inventory, the adjustment may be split to work in process, finished goods, and cost of goods sold. But for most purposes, we adjust to cost of goods sold directly. Okay, so what did we do today? Well, we used job order costing to track cost for customized products or services. We computed a predetermined overhead rate. We applied overhead to jobs throughout the year, computed total job cost and unit cost, improved accuracy using multiple predetermined overhead rates, applied job order costing principles to service industries, adjusted for under and over applied overhead. Job order costing gives you the tools to understand, control, and communicate the true cost of custom work. Get ready to use it all in class, in cases, and maybe even at your job before the semester is over. Let's go.